last, 12, 18 months has been a brutal reminder of how fragile the global economy actually is, with drastic shifts in consumer trends happening overnight, both due to the pandemic as well as the changing needs of consumers. Businesses have been forced to pivot and adapt quickly to survive. So I'm going to ask yourselves a couple of questions. I'm going to start off with yourself, Will. When we think of credit as a service, how has the landscape changed over the last 12 to 18 months?
Oh, thanks. I think there's actually two things that stand out to me. The first is just the amount of new players coming into the buy now, pay later market. Of course, you have some niche vertical players who are very early on going after some niche such as hospitality. And then you have the obviously white labeled platforms that have emerged, which are creating great innovations and access to buy now, pay later for a lot of existing incumbent banks and so forth. But the big one for me is the big four banks who are now kind of coming into this space and coming in with their own set of propositions. And while it's not entirely surprising that they've come into the space given the growth of buy now, pay later, I think they are creating a new wrinkle in defining the buy now, pay later market, what it is and what it means going forward. The second is the pace of change and how early entrants, including ourselves at Hum, have sought to innovate through the application of emerging tech to create new customer and partner value beyond really the credit product itself.
Wonderful. And Piers, what about yourselves at PayRight? Are you finding similar trends?
Absolutely. I think for us, what stands out to me is that credit as a service, and specifically, buy now, pay later, is becoming very mainstream. We are seeing the emergence of a number of competitors and businesses into the space, and it's perhaps not surprising to see why, as people gravitate towards different methods of payment, more transparent methods of payment, and perhaps work with products like ours versus, those traditional forms of credit that they might be used to, credit cards, personal loans, and the like. And I think if we think of it in terms of the last 12 to 18 months, that's been turbocharged with the backdrop of the pandemic, as people have sought access to credit, easy credit, obviously in a way which is served up either online or via alternative payment methods and distribution channels. So, we've certainly seen a lot of that, and I expect we'll continue to see a lot more.
How during these times do you differentiate yourselves?
Yeah, that's really key, isn't it? We are seeing varied business models come out across this landscape, our landscape, and I think what we're finding, in fact, PayRight even in our own right, are we specialise in more considered purchases, and we target a certain sector of the market that perhaps isn't as competitive as others. And I think we're seeing that same trend continue across a lot of the BNPL businesses, some of which really focusing on micro ticket retail sector of the market. Or there's businesses like us that work very closely with trade services, home improvement sector, and medical, dental, and others of a more considered nature. And I really reckon it's a case of businesses needing to innovate to meet the growing needs and demands of consumers, which are becoming a lot more educated. They know what they want now, and they see they've got the availability and the ability to actually choose different businesses. So that innovation key, that need to differentiate and service a certain portion of the market, I think has never been more important than what it is right now. And businesses like ours provide access to flexible, transparent, and very rapid access to credit at a point of sale, which seems to be exactly what the market is seeking, and obviously what businesses like ours assist to serve up.
And Will, what about Hum Group? How is Hum, or how do you in general differentiate yourselves as well during this period?
Yeah, look, I think the reality is the market is so complex, and everybody sort of seems to be doing their own thing, right? Similar to PayRight, we operate in a space in our Big Things product. So we have a unique proposition in that space, similar to PayRight, and we certainly believe that we can take advantage of that with some of our distribution partners and alike. But I think ultimately it comes down to, for us, it's very simple. We just need to be obsessed with our customer base. And for us, it's just listening, spending much more time injecting the customer into our processes to create the products, the experiences, and the channels by which they actually want to do business with. And the more we start to listen, I think over the past year, we've we've actually been able to kind of pick up on what they're actually trying to look for in our product. And it's not singularly just the credit. Of course, we have a long legacy of delivering great credit products, but now it's about integrating ourselves more into their lives, right? And how we do that with a great credit product is about creating a marketplace, both in store and online, that connects our customers to our partners, right, in a more seamless and integrated way, and one that rewards them every time they actually use our payment products or buys our partners goods and services.
And when we think about it in Australia as well as across the globe, is regulation helping or hindering what we're trying to achieve in this industry?
From our experience, Fairgo Finance, it's gone through the evolution through the NCP, and a lot of that was driven by ASIC and really bad outcomes that were occurring prior to that regulation for customers. And so in the absence of where customers are getting that sort of usury pricing and really bad experiences, and it comes at a cost, etc., and poor access to credit, there's a need for that regulation. But you go back, technology, 4G rolled out in around end of 11, start of 12, and now you get 5G coming out, and you've got a lot more technology, a lot more data, the open banking, the consumer rights stuff, consumer data right. You bring those technologies and the transparency that gives to consumers, and those outcomes don't seem to be as apparent. There's more competition and business and rather than it is consumer. So regulation, I think, is catching up with technology, but it's kind of, I think technology is a long way ahead at this stage.
The future state of the sort of quote unquote open banking, right? I think that actually presents itself with a great deal of promise, right? And having that enablement and having access to that data means we as an industry and as a credit committee or as a credit group of providers, we actually now can actually see the data in real time, and we can actually understand what other credit products they may have with other providers, and we can actually make the best decisions on behalf of our customers. So we're very excited about what open banking is going to provide us in the future, not only to look at an individual transaction, but future transactions or historical transactions, so that we can manage our customers' financial health.
Is open banking as well, what role does that have or play in the future with PayRight?
It's crucial, certainly. I think this is where we go back to that technology question and how we can access or gain access to alternate forms of information to be able to inform a credit decision if we need to, inform appropriate lending and appropriate spending in a lot of cases. Being able to serve that up in a really quick, easy manner is sort of crucial for businesses like ours. And I see open banking playing a really important role in that I guess that data play, and help us sort of inform the appropriateness and effectiveness of lending practices, globally, but also probably most importantly, closer to home.
The role of technology. So we've talked about open banking, but just to go back a step around the role of technology, and I guess the role that technology is playing in your businesses. And we'll maybe thinking of our recent launch with Hum. Maybe you can talk a little bit about the role of technology.
Yeah, it's largely the business we operate in. Credit and payments is sort of the customer portion of it, of course, but how you actually create world-class customer experiences that address business problems or customer problems are largely going to be technology centric, right? Obviously, in May, with the support of EML and others, we actually launched our own digital card, which was huge for the sake that we could actually sort of modernize our payment product, moving away from barcode and moving away from a point of sale integration requirement. So our ability to basically take a simple product construct, put it into a mobile payment, and have customers walk into a store or use that card online was really exciting to our partners, not only our existing ones, because they had less costs on training, but also to our new prospective merchants who basically see zero cost to integration, right? So that's certainly one of them. The second one for us is about technology platforms and partnerships. So we look at this in a partner type model, which is what emerging technology that we don't actually have to build from the ground up can we actually integrate into our ecosystem to not only enhance the proposition or our product strategy, but make it easier for our merchants as well. So we sort of see this idea of using technology partners to not only solve today's problems, but those of our customers and our partners.
Yeah, I mean, I completely agree. I think this is where business partnership, and we're very fortunate to be working with EML and being able to set up and deliver up really important, quick, rapid credit decisions to our client, make it very transactional. I mean, this is a really important element for us. I mean, I believe that access to credit shouldn't be difficult. It's got to be fair. It's got to be honest. It's got to be appropriate for the person that we're operating through. But it shouldn't necessarily be cumbersome or challenging. And I think businesses like ours, and there are certainly a lot of others who can provide this through different forms of technology and through different partnerships, is a really crucial part of the role we play in the that fintech community. And a really important aspect, I guess, of meeting the lives and the expectations and the needs of the broader public. And like I said, feel very pleased to be working with EML on bringing a lot of these things to light.
And Paul, same in your business. I guess with transformation, technology and advancements in technology is essential. With Fairgo Finance, what role is technology playing?
It's the centre of we're an online business, and we've got to transition from being where customers go from buying things online, direct through multiple channels, multiple platforms, etc. So the customer behaviour is changing significantly. I mean, it happened in 2012 when mobile first became a thing, and regulation changed. So you're constantly adapting to whatever change in the environment is, and technology is key to that. Interestingly, back to the regulation point of view, and so regulation changed for our industry, and we had to get bank statements for our product, 90 days of bank statements. So we've actually been having the benefit of, I suppose, screen scraping transactional histories for 8 to 10 years. So now that's becoming a bit more normalised through open banking, and it's going to extend into a whole lot of other aspects of the consumer's life. So I think technology and how we extend our smarts or how we do credit decisioning into other parts of the customer journey is going to be really, really interesting. But then we've got to surface that on different platforms, and whether it be an app, whether it be mobile payments, but the customer expectation now is personalisation and sort of targeted offerings. So you've got to be able to do that across the journey, and I think that's the challenge and the opportunity for all of us.
Will, when we think about the future with Hum, the future in the industry, what does the future look like?
I think it's going to be busy. I don't believe you're going to see one type of buy now, pay later in the future, or credit provider in the future. I think what you're going to see is a healthy mix. Customers will have a bevy of choices to solve a lot of credit-based problems, from personal loans to credit cards to buy now, pay later to any other type of emerging credit product. I think the reality for me is for us, it's about staying focused on a very clear strategy, right? It's about the simplification of a product, making it easier to digest and integrating it into the products or the services and helping them sort of find those products and services more easily. And then integrating sort of what I would consider some version of an incentive or cashback or reward proposition, so that they always feel every time they use a Hum buy now, pay later product, one, they're getting a great product from a retailer, like a good and a service that they fall in love with, an easy way to pay for it, and some version of integrated reward. So for us, those are the strategic pillars that we're going to continue to invest in. But it's always going to be with a customer mindset and a customer's perspective. And we'll obviously think there'll be a whole boatload of competitors coming, doing a lot of different things. But for us, it's about just staying focused on those three pillars.
Piers, PayRight, what's the future look like for yourselves?
Yeah, look, man, it'd be interesting, isn't it, to have a crystal ball to be able to look forward into the next 12 months and beyond. I mean, we are absolutely focused in on the growth of the sector. Our vision, one of our visions really, is to be able to put PayRight in the hands of every consumer. Now, we feel we can do that in a really easy, transparent way. We feel we can do that in a compliant manner, and that does really require us to fully understand the customer's requirements and needs, and doing what we can to try to keep them in that ecosystem, be able to keep them interacting with us, be able to give them serve up new ways and better ways of being able to meet their needs. And I think that's where our focus certainly will be. I think what we will see across the broader sector, and perhaps credit and maybe even buy now, pay later as a cohort, well, we're going to see some consolidation. We've already seen some of that sort of transpire across the market. There are a lot of really exciting companies that are coming out with really unique business models. And I guess that's probably not surprising in a sector like ours, where it's growing 32% annually. We're seeing contraction of credit cards and other methods of credit that we mentioned earlier on. So you expect to see some new entrants to the market, but I think what we will start to see is that start to turn. Those business models be perhaps a little bit better defined, and ultimately be able to provide customers with a myriad of different reasons for using credit, and perhaps buy now, pay later and other methods of payment, so that we can meet the full payment needs of a consumer that might go just beyond the requirement to be able to make a purchase for a product or service, and perhaps go well beyond that need. And I think that's where we'll see models start to diverge and potentially some consolidation over the next 12 to 18 months.
Will, you've talked a few times around the importance of partnerships. What makes up a good partnership?
Well,
with your experience?
Yeah, there's a lot of emerging technology out there. So you actually have to spend quite a bit of time looking at the technology, the capabilities, the culture of the organization, where they are geographically, what their global strategy looks like, and see if there's alignment. That's the first and the foremost. But beyond that, once you've made a decision on a partner, you're looking for somebody who has a unique set of capabilities. One of the points that we've discussed through this panel is that buy now, pay later and credit largely is becoming commoditized. And I think you've heard us talk about that technology is the point of differentiation. So we're looking for partners who have emerging technology, who actually have in-house capabilities that can sort of augment their own capabilities to fit our organization, right? So nothing cookie cutter, and we very much are looking for progressive thinking, and somebody who's malleable to both our changing context and our big business that we've kind of built so far. So we found some great partners today, and we're excited about what they can bring for us in the future.
That's why you work at EML. Well,
exactly.
Here's PayRight. Any plans to expand globally with PayRight?
Yeah, I mean, probably first and foremost, we operate across both Australia and New Zealand currently. So we have a good understanding of the market, and I think we mentioned earlier on the reg space there is slightly different, which was obviously a topic we chatted about earlier on. So a deep understanding of about that, but certainly our journey doesn't stop there. We see ourselves being able to branch out much more broadly across the globe, and I think that's one of the benefits, I guess, of the world perhaps getting a little bit smaller and us all getting a little bit more connected, and the benefit of a variety of different technologies that enable everything, enable connection to credit and to customers and merchants. I think the other element there, of course, is a lot of the partners that we deal with, and we mentioned earlier on, of course, they might be based in Australia, but typically they might have operations overseas. So being able to connect up our product across that broader global piece is really, really important, and we are actively looking for ways in which we're being able to do that. Some of it, of course, is through just growth through organic growth through other geographies, but equally a lot of it is by aligning and working with the right channel and strategic partners to help try and enable that, which really does echo the sentiment that you mentioned before, Will, around that strategic alignment, ensuring that you're partnering with people that complement your vision, but equally and probably more importantly, can provide a different context or perhaps fill a gap that you might not be able to fill in your own right. So that complementary service and ability to be able to grow with them, I think, is crucial, and that certainly forms part of our thinking when we're looking at expanding abroad. Yeah,
and I guess, Will, as well, similarly with with yourselves and your global expansion plans too.
Yeah, so obviously we started in AU and moved to New Zealand, and then we've recently announced that we are going, and Ireland, of course, and that we've recently announced that we're moving into the UK and Canada. And so to Pierce's point, it's really about creating a global product, right? A global brand that has a global product that's easily to replicate as well as you can be in regulated markets. But with that being put aside, the idea is to create a simple standardized product globally that you can then take into multiple markets based upon those partnerships.
And you talked a minute ago about offers. I guess this is just one of the beauties of advancements in technology.
Yeah, so there's this emerging sort of capability or technology known as affiliate networks, third-party coalitions, and so forth. But I think the reality is at home we believe that customers want to buy things, right? They want to buy a couch, they want to get their teeth fixed, right? And they want to afford those things. But we need to be better at understanding that the thing is what they want, not the credit product, right?
Yeah.
And the other thing that consumers have now become quite comfortable with is they want a deal. It's really about understanding your customer, right? So having a huge amount of distribution that you get through affiliate networks, using your digital card, right, to basically seamlessly turn on these brands, basically gives my customers more places to shop. And this idea that you can now effectively integrate a cashback offer or a discount instantly into the payment product means that the customers never have to worry, right? They never have to think, when's my cashback coming? It's all completely integrated. So it's not one singular technology. It's actually about how you tie together experientially something that's brutally simple that allows the customer to buy something they love that has an integrated cashback offer that's personalized for them. We think that's largely what the future is going to look like.
You know, a lot of major brands have made changes and sort of starting to get into this space with, you know, Square acquiring all of Afterpay shares to PayPal last year announcing their buy now, pay later in 4. You know, banks with CommBank last week with Westpac getting into this space. What's your views on how they're going to go?
Yeah, well, look, I think that really does tie up a lot of the themes that we're sort of seeing here. First and foremost, you know, it's a testament to the growth of the space that we're seeing. You know, global giants like Square and working with businesses like Afterpay and other businesses equally as big. You know, I think that's the testament that we're starting to see, and the way in which we'll see the market start to unfold as other businesses look to improve their own technology capabilities, reach more customers through other innovative partners and partnerships and adjacent kind of business models to be able to improve the customer experience and do so in a really fair and transparent, simple manner. So I really do think that kind of ties up a lot of the key themes that we've chatted about today, and you know, I think we'll see more of it. You know, you mentioned, of course, CommBank and PayPal, you know, launched their own Pay in 4 model, which I think we'll also see more of. So there's that competitive landscape at the micro ticket end of the market is pretty hot. A lot of providers there. I think that also it shows the importance of other businesses to be able to carve out their own niche and their point of difference in the marketplace. And we at PayRight certainly feel that we've done that and done that quite well. But it does go to show the appetite for people to want to spread the cost of their purchases over time in a really simple and easy manner. And I guess how that can be globalized more broadly across multiple, you know, geographies. And that is starting to play out at the moment.
Yeah, I mean, it just comes back to that differentiation, doesn't it? You've just got to stay ahead and differentiate yourself and really know your customer today and tomorrow.
And it's really exciting to see the role of digital technology and innovation and the role that payments also has to play within your and your industry's, you know, growth and future. So thank you again for spending time with us at EML.CON.
Thanks very much.
Pleasure. Thanks, Rachelle.